Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, March 8th. Okay, it's 6 o'clock as I'm starting the video. Quick look at futures has large caps, ES, down 0.7%. Small caps down 1%. And the NASDAQ down nearly 1.8%. So we're picking up Monday morning kind of how we left off on Friday with a very volatile session. Yields are ticking up again. Asia had a very rough session last night. Most markets off at least 2%. China had a rough session. Japan was down. All of the Asian markets were down yesterday. So let's get into it. SPY Daily, you can see here that we've rolled over to a certain degree. We spent a day closing below the 50, which is the green line. Took a look below, and then on Friday we again went down towards the lows, but recovered at the end of the day to close above the 50, which more or less is at 380, and below the 20. Let's call that 385. So those two toggle levels, 385 and 380, become important or remain important. They've been important for the last week or so. I think if SPY can break above 385, price will have recaptured all the moving averages. It, of course, will be above the 50, but also breaking above the 8-day and the 20-day. So that would be a very bullish event. But now, I mean, with futures down about 0.7%, we are back down closer to 380 than we are 385. So today, that 380 level will again come into focus with the 50-day moving average. Here's the 2-hour look from Friday. We had, this black candle here was the open, and we did a good job on Friday in the pre-market saying watch out for that open, that it looked very suspicious. We were right at resistance, and I thought that there was a good chance that we would come down and close this pre-market opening gap, and we did, and we went down even further down into this 373 area before reversing. So that was a good start to the day. We'll talk about the afternoon later, but we got a big bounce into this 385, which again was the that key level that we just mentioned. I think that is a big pivot level for SPY at 385. And then here's the 30-minute look, where here was the opening candle coming down, not quite back testing the prior low of Thursday, but getting close, and then putting in a big bounce from, call it 373 all the way up to 385. That would have been a fantastic trade to make. And you don't know all this is going to happen, but what you do know is on an active trader level, one of our guiding principles is recapturing levels from below. So look down below, recapture 375, recapture 378, recapture 381.50, wherever that level is. Those were all confirming signals or buy levels, whether you caught. You don't have to catch the reversal right at the bottom. It's great if you do, of course, but you had confirming signals all the way up where you could have bought here or here and gotten nice lifts into the close. So let's look at the Qs. Here's the daily. And as we've been talking about and has been widely noted, that the Qs are bearing the brunt of this sell-off with the the high valuations, interest rate sensitivity, etc., etc. And you can see that price is well below all the moving averages, except the 200, of course. The 8-day in pink has crossed below the 20 and the 50. The 20 is steeply rolled over, and now the 50 is rolling over. So in the next day or so, unless there's some big rally, the 20 in blue will fall below the 50 in green. So that's going to be a very bearish posture. And remember, as these moving averages often act as support on the way up, now as these moving averages come lower and are angled down, they will act as resistance on the way up. So we're going to be looking for, of course, any breakout above the moving averages. That would be bullish. But now I don't have it drawn in here, but there's a down. You can see a downtrend line off of the high connecting these highs. And so we can put fib levels in here. We've got declining moving averages. So, in the Qs, I would not be too eager and get all excited about, picking a bottom. The preponderance of the evidence at this point says lower. So I would be looking for short entries on the Qs, not long entries for people trading the daily time frame, swing trading. I would be, if you covered in here on Friday, great, good for you. Now, if there's a rally back into resistance, that would be an objective place to try a short. Q, 2 hour. Here was the deep move down to that 297, which we had correctly identified as a target and support level. Then we got the big reversal in the afternoon coming up, recapturing this 307.50 and actually pushing a little bit higher. And we can see that really well on the 30-minute chart. Here was the deep look down to 297. And then the bounce. So just from a technical perspective, if you were short starting the day up here at 307.50 or 308, that was the the opening candle that we had talked about, and you got that move down to 297, that would of course be a logical place to cover your short when that level wasn't broken. And if you were Joe Trader, flip for a bounce. We got a huge bounce, and then as we talked about on SPY, if you're below a level, recapturing 300 would be a buy trigger. Recapturing 304, breaking this downtrend line, is a buy trigger. And recapturing 307 was a buy trigger. And if you got, let's just say you bought at 300, you ended up getting a phenomenal trade up here to 310. A $10 move in the afternoon is just ridiculous. Now, I'm not, I'm not, I'm not embarrassed to tell you this because trading bugaboos get everybody, including me. So I'm going to tell you what happened to me. So maybe it'll be a learning experience for your own trading. Now, you've heard me often say, stay away from financial media. Don't listen to those narratives because really what you got to do is focus on price, right? And don't get wrapped up in narratives that people or the media may be feeding you. Well, another thing to keep in mind is the narratives that your own creative mind might whisper to yourself. And those are actually the most powerful narratives out there because you create them. So if you're part of the group, you got a midday note from me saying, we're starting a bounce. I think it'll be short-lived. And if we bounce into the close, I won't be buying. Why would you think that? Why would you say that? That's what I was thinking to myself at the end of the day, because I talked myself out of, to a large extent, not a complete extent, but to a large extent, I talked myself out of participating in this move. So instead of just following price, recapture of 300, that's bullish, buy. I was saying to myself, who wants to get long into a weekend, right, with all this volatility? I don't, right? So that's what I was whispering to myself. That's the wrong thing, because just because you buy at 300 at noon or 12:30 or whenever that was, 10:30, 11, you don't have to hold a long over the weekend. So why would doing something at or having an idea about where you want to be at 4 o'clock, what does that have to do with 11 a.m.? So instead of being long, being open to a healthy bounce, I was on the other side, not short, but looking for a reversal. Kind of ass backwards, right? Because if you were long, participating in the bounce, you could say, okay, I'm long. I'll be ready for a reversal at 304, which would have been a logical place for a reversal at downtrend resistance. But you wouldn't just close your long because you thought it might reverse. You would close your long when there was some evidence that price stalled, and you never got that. It punched through and kept on going. So if you were skeptical at 300, you had to be a buyer at 304, taking out that well-defined level that we had from before and taking out downtrend resistance. You took out 2 layers of resistance. That's a long. And then even if you got long at 304, you had a nice move into 310. So while the price action was dramatic, that's often the simplest price action there is because it's one way. There aren't reversal candles to shake you out. It was a one-way trade. But if you're whispering to yourself, counterproductive ideas or thoughts out of your own creative memory, then that simple trade all of a sudden becomes difficult. And that's what happened to me. And it's a damn shame, because I know I'm better than that. I know you're better than that. So I think in these active trading sequences, don't get too cute. Act stupid. And what I mean by that is, don't overthink it. Recapture a level, buy it. Recapture another level, add to it. If you missed it, you missed it. But then if you recapture yet another level, buy that one. And if it reverses above, fine. But you're on the right side of the trade. So anyways, that was my Friday experience. What kind of balanced it out was I got the first move, so I was feeling all good about myself. But then by the end of the day, I wasn't feeling so hot because I missed most of that move. So, that's trading. I'll get better. I'll learn from it. And I hope that my sharing my thoughts at noon, I hope that did not derail your trading. So let's move on to IWM. Big hammer candle. I think 217.50 remains the key pivot for IWM. We came here, we sliced through the 50, but then recaptured it, just like we've been talking about. Once we went down below and came up and recaptured, that was a buy. There was a buy here at 213 and right on up. I think, though, now that we are in the pre-market below 217.50, that remains the larger pivot for IWM. If it can break back above this resistance level, then it'll be on firmer footing for a move higher. But as long as it stays below, I think the path of least resistance is lower. But that said, it's been outperforming because it's got all those value and cyclical names in it that have been in focus and part of the buying. Here's that another nice picture of that afternoon rally. Recaptured 210, recaptured 213, recaptured 215, and right on up. So if you got that reversal point at 207.50, you basically got a $10 move, and that would have been a huge gravy train. Quickly through FANG, which has quietly outperformed the bubble stocks and the Qs, as I think some traders have found value in these names that actually have earnings support. You can see here on Facebook a big $12 range, 254 to 266, toggling back and forth. There's plenty of room to trade within the range if that's what you want to do. If you're more of a swing trader, if you get a break above 266, you can be long. But within this range, there's going to be a lot of chop. Like I said, plenty of room there to trade level to level if you want to actively trade it. Apple back tested this low of 118.50 on Friday, made a look below and failed, and then rallied. I think to get back on track, price needs to break above 123 and really needs to take out this downtrend resistance around 125 and then 127. So you can see this pronounced downtrend within this rather wide channel. So still in a downtrend. bouncing off the lows. Watch how price handles 123. Tesla, this is the daily chart. I flipped back to the daily because I wanted to show you something. Big rollover top, pronounced downtrend, below all the moving averages, big trend line off the March lows. So now we have a daily sell signal. We've broken below 650, which now is a big resistance level. If you got a kickback into 650, I think that would be a place to try a swing short if you're interested in trading it against this downtrend resistance. And notice PPO has been in the bullish regime the whole time until now. It's not. It just went bearish a couple of weeks ago, dropping below the zero line. And on this longer time frame, we're not talking about the 60-minute now. It usually does not reverse on a dime. Now we've got RSI even pushing oversold here down towards 30. So, like I said, it's getting a little oversold. If you were to get a kickback rally, I think it would be a nice place to enter a short. You've got to figure a solid test of the 200 down towards 520, 500, right in that area for a good hard test of the 200. And then if it breaks below 200, then all bets are off. Microsoft had a nice bounce like most of the other stocks, but now this morning it's been embroiled in its Microsoft Outlook Exchange server hack, which has gone worldwide. They're saying it's Chinese nation state hack. So when I looked this morning, it was down below 230. I think 230 remains the pivot on Microsoft. If it stays below, then I think down here at 226 is a key level. And then 222 was a big breakout level on the daily chart to watch. Amazon Daily, the free 50 club, gave you a 4-bagger on Friday with $200 of travel. It opened at 3,000, broke below, went to 1950. So there's one free 50. We talked about if it broke below 2950, look for 2900. You got that. So there's your double. It reversed, reclaimed. Get long 2900. Reclaim 2950 and put in the big $200 round trip from 3,000, undercut 2,900, back up to 3,000 to close mostly unchanged. I know it sounds simple. Every 50 you just follow it, but sometimes trading is simple if you don't let your head get in the way of the price action. It's worked, and it's worked great for the people that have been actively trading those $50 levels. Google, very strong, pushing up towards the back up towards 2100. I think that's your pivot. If it can break out and hold it, then the door is open for new highs up here at 2200 was a measured move target. But if it gets rejected here, I assume it's lower in the pre-market with the NASDAQ down. You're back into this chop. Netflix, like everything else, got the bounce on Friday afternoon. Came down in here low to this 500 that we had marked. You got a $15, $18 bounce into the close. Filling this gap that I have still have on here, I will take that off. But now 515 is your pivot. If it can't hold 515, then I would assume it's going to come back in here to back test 500 down here, and then you may have the opportunity for a double bottom. Now, I want to continue to keep an eye on the ARK family of funds, just because of the nature of their holdings. Very high valuation, very little earnings support, and very much susceptible to these interest rate moves. I shared with you that I had gotten short ARKF and ARKG, and I took a short position in ARKK. So let's take a look at them. FinTech. Broke lower, big hammer, came back up. Of course, with NASDAQ down 1.5% to 2% here this morning, ARKF is down along with it. I think if you're not in it, watch this 49 level here, and then watch your 200. Also, watch getting oversold on the daily chart. ARKG, big hammer off the 200. Normally that's a bullish move. If you got some follow through back up towards 90, there should be a wall of resistance at 90. And if I were not in it, I would be looking to put on a short here at 90 and then look for a move back towards 75 at the 200, where I would be looking to close that out or cover it. But if you got in near 90, you could set your stop just above, and then of course take that paper cut if price came up here to back test this trend line. But there's going to be a lot of resistance here at 90. This is their flagship fund, the Innovation Fund, ARKK. Again, big hammer off of the 200. I got short into the close with March 115 puts. So I'm looking for this to come back down. We'll see if that happens. A lot of that is going to be tied to Tesla, which I believe is their biggest position in the K fund. The autonomous, again, very similar price action. Everything is exaggerated in these ARK funds, both on the way down and the way up on these moves. A lot higher beta than normal. Big hammer, reversal. Again, just looking at the structure, if you got a bounce into 84, 85, or into the 50 here at 86, I think that's a nice objective short. I'm not in it, but I think if you got that move there, that would be your objective shorting location on this ARKQ. W, big look below, fail, look into this void, recaptured this key level at 145. If I was watching this one, I would key off of that level, 145. I think the bulls have saved it above 145. I think the bears move back into, the bears are in control. So any kind of kickback, if you want to, lay on a short at 155 or against the 50, that's certainly objective. My point in this 145 is that was an important level to recover for the bulls, and they certainly wouldn't want to see that level go. Lastly, wrapping up with PRNT, the 3D printing, took a look below 39. I actually went to short this on Friday and I had not done my research, and there apparently is no option chain on this particular ETF, which I found very surprising. So unless I got my facts messed up, no option chain there. So that's off the board for me. But you can find plenty of 3D stocks if you want to look. There's Triple D, DDD. There's SSYS, Stratasys. I think there's One Printing. There's a bunch of them. If you went to the PRNT, if you went to the ETF guide on any of your ETF trackers, you can get a breakdown of. You may even be able to get it right on ARK website. You can look at their holdings inside PRNT, and if you wanted to, play those stocks directly, then there would be a list of them there. And I know, Triple D and Stratasys and some of the bigger 3D names certainly have option chains for you to participate in if that's what you want to do. Okay, we're right at the 30-minute mark. Let's do a quick recap. Volatility is back. Excuse me. Stay really nimble in your positioning. Don't try to be a hero in the Qs. Bears are in control. The reason I say that is price is well below the 50, and until price can make some recoveries on the QQQ chart, the bears will remain in control. The biggest question I have here is, does this remain a sector rotation, whereas money comes out of the Qs and into value cyclical names, with SPY and IWM possibly trading down slightly but still outperforming? Or does this thing morph into more of a market-wide type correction? And the only way we'll know that is, number one, SPY. Does it lose 380 and lose the 50? And IWM, does it lose the 50? So if the broad market averages all lose their 50s over the course of this week, you'd have to conclude broad market correction. If SPY and IWM hold firm and QQQ remains to wobble, then we can say, at least at this point, sector rotation. So let's watch today. And in your active trading, be on guard against narratives, both from the outside and those you create yourself. A lot of times those narratives will lock you out of opportunities and blind you to them. Don't do what I did on Friday and come up with a big idea that doesn't have anything to do with anything. Follow your levels, level to level, and you will always be on the right side of the trade. And certainly if price reverses, that will be front and center, and you won't have to guess. If prices are recaptured, it's bullish. If they subsequently lose those levels, it's bearish. And then follow that in your active trading. If you do that, you'll have a good day of trading. Let's wrap it up there. If you're new to the channel, please hit the subscribe button and the alarm bell. You'll get all my content when I publish. And also over in the show notes, links to the blog site and how to register for all my content. And you'll get intraday market notes and other tidbits not sent to the general public. Be great to have you join us, and you'll also get an invite to our trading room where you'll find lots of ideas and camaraderie amongst aspiring traders. Great community, great to have other people that are pulling for your success. And when you have rough days, they'll lift you up, and when you have good days, they'll celebrate those successes with you. So Have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.